where we're saying, welcome to Tara. Tara stands for there are reasonable alternatives. There are reasonable, real alternatives to stocks. And we've been talking about this for a couple of weeks. Last week, it was why we had to say goodbye to Tina, which is in the past couple of years, there were no alternatives to stocks. So someone coined that term, Tina. There is no alternative to stocks. So again, now there are real, reasonable alternatives, and we'll talk about some of what those alternatives are, what those real, reasonable alternatives are, and strategies both for trading and also just the realization of how that affects our trading. So now let's talk about our theme for the week. Welcome to Tara. There are real, reasonable alternatives to stocks. And we, again, have been talking about this for a while. Last week, the title was, say goodbye to Tina. There is no alternative to stocks. And now there are, and the reason being is the high interest rates causes essentially the discounted cash flow is you can now invest in things that provide you with a return based on the interest rates, etc. And again, stocks, particularly growth stocks that are not paying a dividend, become less attractive because the value of your dollar is more valuable in other assets like bonds, interest-bearing accounts, etc. And we'll look at a number of these. So flip of the ship says the bonds are getting very overheated. Yes, and we expect them to continue in the trajectory they're in. We talked several weeks ago about the fact that I expected it's going to have to be between 4 and 5% because the Fed rate is going to be somewhere between probably 4.50 and 5%. So the bonds are need to approach that level. And at the time, people were saying, no, it wouldn't go above 4. Well, yeah, it's between 4.25 and 5. So I don't expect that to change in the very near future. So let's talk about some of the alternatives to stocks, given that the interest rates are increasing, they're high. So now, bonds are paying a real return. So I included some links to the Treasury Direct. You'll hear about people now are buying bonds. People are buying those 2-year bonds that have a very high yield. They're buying 10-year bonds because they pay over 4%. People are interested in I-bonds. I-bonds are inflation-adjusted bonds, and they're paying a better than 9% return. So I also included the direct link to where you can go to buy I-bonds on the Treasury Direct website. This is the only place you can buy I-bonds is directly through the TreasuryDirect.gov website. You can also find that link. I've got a link to I-bonds on our website, which is BeachBumTrading.com, bum without the U. So if you look in trading resources, reference links, here's a link to I-bonds. That'll get you to the Treasury Direct website. And again, you can also buy U.S. Treasuries there. They'll explain to you the various ways you can buy U.S. Treasuries. So you can buy those 2-year bonds, the 5, the 10, etc., and earn a 4% return on those bonds for that period of time. So again, you hear people actually going out and buying bonds, and because again, it's the treasuries are essentially risk-free, right? So all of this is about risk reward, right? What's the risk and what's the reward on your cash? And people want to minimize the risk and maximize reward. And the question is, where's the balance for you? And that's going to vary by person. Obviously, when do you need the cash? Do you want to lock it up for 2 years, 5 years, etc.? And what kind of return do you need? Because again, the return relative to inflation is important. If we're running 8 or 9% inflation, and you're getting 4% on your money, well, you're losing money, right? So again, and that's what stocks are competing against. If I can get 4% at zero risk, versus putting in a growth stock, well, I might get better than 4%, but my risk is going to be a lot higher. So again, it's balancing those out, and it's all about risk reward. And again, it's going to be based on the individual. But now that these treasuries are paying 4 to 5%, it's not zero like it was. There used to be no alternatives, right? It was you got zero for your money, or you put them in stocks and got something. So now I can get 4% treasuries. I get 9% I bonds. Corporate bonds, again, are going to be higher risk, but potentially a higher yield. Municipal bonds for governments, cities, counties, states, etc. Again, they'll potentially have a higher yield. I believe these, at least some of them, are tax-free, so the interest that you earn is tax-free. I don't believe that's true of corporates. There's also this thing called agency bonds, which is something that things like Fannie Mae, Freddie Mac issue. And we've talked about an ETF, a fixed income bond ETF that we've been watching. But again, it's been plummeting because the price of bonds has been plummeting. Just like everybody's the mutual funds, they've got their 401k with that old 60-40 mix. They've been getting pummeled because both stocks and bonds had gone down, and bonds are continuing to go down. So let's talk about some other alternatives to stocks. Where else can you put your money to get a return that might be better than stock? We're hearing a lot of people talk about waiting for the bottom in real estate. Real estate prices are coming down. Some of the high-end demand is drying up, and so people are pooling cash, waiting for a bottom in real estate. Obviously, you don't want to take a mortgage, so they're looking at, pooling cash to buy depressed real estate when that market, rolls over and bottoms. A lot of this is investment property that then, you rent it out, whatever, and generate cash flow. So again, that's where money's going, right? It's coming out of stocks, going into real estate, even CDs. This is just history thing. This is what my parents used to always put their money, and that's all they knew. They didn't know anything about the stock market. They put all their money in CDs because at the time it paid something. Now, in the past couple of years, they didn't pay anything. Well, now they're starting to pay some percentage. I don't know what the interest rates on CDs is right now because I'm not terribly interested in them, but similarly, with high yield savings accounts, now you can put your money in a savings account and earn, a reasonable interest rate at a minimal risk, and that money is liquid. So, uh, okay. So some other areas, some other alternatives to stock is businesses. You can either invest via private equity, which again is private investment in various businesses. Again, that's a lot of your accredited investors, your wealthy individuals. They invest over in venture capital, private equity, so that you're seeing an increased interest in that area. Another thing that you can do, or people are interested in, is buying a business or investing in a business. Again, if they see the potential for a higher return, and again, as another general statement is. You want to get something that's going to be both beat the rate of inflation, and also be resilient to a recession. So if you're looking at any of these investments, real estate, a business, etc., is how resilient to high inflation and a recession is that investment going to be. So again, part of the factors that you balance in terms of looking at an alternative to stock. Judy Tubman asks, are bonds safe? Well, U.S. Treasuries, are backed by the U.S. government. So unless the U.S. government goes under or defaults on their bonds, that's the lowest, probably the lowest investment. As you go up that ladder, obviously you're increasing your risk. So municipal bonds are backed by a city, county. Now we've heard cities and counties go bankrupt. So, there's a little bit higher risk. Corporate bonds, again, companies go bankrupt. So again, a little bit higher risk. However, these are debt instruments, and typically in a bankruptcy, a debtor, a creditor, is paid before any stockholder. So again, these are lower risk than stock in that same company because you are a creditor, and creditors get paid first before stockholders. So I hope that answers your question. So some other alternatives real quick, and then I'll try to wrap up. There's also this, because interest rates are high, some people can't afford to get a loan from a bank. Credit card credit is high. There's this concept of peer-to-peer loans. So if you're the person loaning out the money, you could possibly get a return by loaning to someone. Now, obviously, that's a little bit higher risk. They could default. You could lose your money. But I looked at that several years ago. I haven't looked at it recently, but I expect increased interest in that area. Now, some other alternative investments. All kinds of different things you can invest in. And again, it's a balance of risk reward, cryptocurrencies. Again, it's not a stock, so it floats differently and it's going to be influenced by different factors, although we've seen a lot of correlation due to risk. So risk off, cryptocurrencies tend to get hit. Risk on, they go up. At least that's been the tendency. NFTs, I almost put that under collectibles, but it's kind of related to cryptocurrencies, blockchain, etc. And it's kind of a collectible, although they do have other uses. So also people are talking about investing in fine art. Again, things that are potentially inflation proof, are not, directly correlated with stocks. Land, people invest in farmland. There's an ETF called Land, which invests in farmland. And again, it's real estate, it's land. So, and it will tend to be inflation proof because the value will tend to go up with the value of the dollar. People are talking about fine wines, precious metals. You can buy coins, gold coins, silver coins. You can buy bars. You can also invest in ETFs, and tomorrow we can look at some of the ETFs in these areas in our ETF Google sheet. So also, I actually Mark J. Kohler, and there's a link to his site on our website. Very good tax attorney, investment. They have a self-directed IRA, and they allow you to invest in some of these alternative assets, even from a retirement account, from an IRA. So one of the things I know he's done is bought livestock. And in his IRA, in an LLC attached to his IRA. So again, you can invest in all kinds of things, even in an IRA, but you need what's called a self-directed IRA because your traditional one they're not equipped to allow you to invest in a lot of these alternative investments, even things like cryptocurrency. A lot of retirement accounts don't allow you to invest directly in those kinds of alternative investments, but get increased interest. So I think you're going to hear more about people putting money into these things, which means there's less money going into stocks, so less demand. Yeah, again, it's supply and demand. So if you have more sellers, fewer buyers, prices go down, right? So just real quickly, some of the other reasons why there are reasonable alternatives, high dividend paying stocks, these are going to be more attractive. Again, if they're paying over the Treasury bond yield, so if they're over 4.5%, they're attractive. And some of the non-mortgage backed REITs we like is, Realty Income, Stag, LTCs. Some of them pay 5% plus. Some of the ETNs based on commodities, GLDI, SLBO is gold and silver, USOI is on oil. These guys pay, in the double-digit returns on a monthly basis. So again, these become more attractive. But again, any dividend below 4%, why would you buy them? You can buy a treasury and get 4% at almost zero risk. So again, if people are buying dividend stocks, if it's less than 4 or 5%, they're going to be less attractive, and therefore the demand's going to be lower. So if you have any questions, I'm going to wrap up real quick. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow BeachBum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left hand corner. You can watch another video like this by clicking on the box in the lower right hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right hand corner. Our latest video is available in the box in the lower left hand corner. We hope you like this and have a great day.